Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning as usual on May 12th. So yeah, yet again, not a lot has changed from a top-down perspective. We're still seeing the big cap indexes hold in there pretty well. We're seeing kind of even the equal weight big cap indexes a little bit weaker, and then the broad indexes, not weak, but just kind of bringing up the rear there with financial stocks and all that sort of thing. So overall, it's still kind of a trading range, intermediate term trend neutral, but very narrow, not a lot of stocks hitting new highs and stretching their legs, that sort of thing. Now, I would say on the individual stock front, I'm still seeing air pockets. We got hit with one this week on a half position after earnings. But I am also seeing some intriguing action. Some stocks for the first time in a while are kind of gapping and go, sort of a breakout and just they run for the next few days as opposed to immediate selling. I'm also seeing some interesting sort of, I call it shake and snap, but basically shakeouts and snap right back type of action, whether it's on earnings or just a rebound after kind of superficial bad news. Plus, I'm still seeing a lot of setups and things that are acting well. So I don't want to say the evidence is, on the edge of a knife. That sounds very dramatic. But I do think that, it's very much on the fence. And so if, obviously, capital I, capital F, if something changes, if we get a character change in the market, maybe there's a debt ceiling deal. The Fed seems to be maybe off the table here for a couple of meetings. That seems to be what's leaking out. If there's sort of a character change in the market, you want to be ready for it. I'm actually spending more time than ever, especially now that earnings season is kind of wrapping up, making sure I'm on top of everything and the numbers and all that, because I do think things could change. And if they do, they can change in a hurry. But I'm not anxious to obviously front run it. You still have to see it first to believe it. And right now, there's still a lot of selling on strength and all that. So long story short, no real change in my view of the evidence right now, except for the fact that, it's all right there. It's not like, everything is buried and everything's broken down and it's going to take 4 or 5 or 6 weeks to repair the damage, best case scenario. I do think if things can turn, they could turn in a hurry. So you want to be ready, but not anticipated. In Cabot Growth Investors model portfolio, we're actually about 2/3 in cash. We sort of been kind of piecing out of some things. I would like to put some of that to work, but given the sort of washing machine environment, just waiting to see a little bit more strength or a little bit more stability in some of these names. So probably putting some money to work, hopefully, here in the days ahead if things can hang in there. But still overall cautious, regardless of the exact cash percentage, okay? Let's hop into the charts. As usual, I am using MarketSmith. It's a product of Investors Business Daily. You can learn more at marketsmith.com. So again, NASDAQ, same story every week, right? NASDAQ is resilient, mainly because of, yesterday or the last couple of days, I think it was Google and then, Microsoft and Facebook, Meta, so it's looking pretty good, nosing out to new highs here. It's really led by just a few names down today, 50 points, but it still looks pretty good. S&P 500, a little bit less good, but still generally kind of in this, pretty nice little setup in here. So again, if this is my point is if things kind of kick into gear, it's not going to take long before the two biggest, most important indexes are at new multi-month highs. And, as I'll show you in individual stocks, that some things will look good. But right now, we're still kind of chopping sideways. And again, I don't want to spend too much time on it, but here's IWM. I mean, if anything, it's closer to, I'm not anticipating a breakdown, but I mean, it's closer to kind of testing its October lows and summer lows from last year than it is on the other end of the spectrum. Mid cap, same sort of thing, not as bad. You can see it's up more, but still just kind of languishing. And by the way, if you look at stuff like even this is the RSP, which is the S&P 500, so it's all big cap stocks. It's just equal weighted. It's not Apple, Microsoft, and all that stuff. And you can just see what this looks like. It's in this correction. It's not. It's not incredibly weak here, but it's having trouble getting above the 50-day line and all that. So this is what I mean. Just most stocks are languishing, not doing much. There's a few names. Don't get me wrong. There's names set up out there, but I don't have too much stock envy at this point just because usually some of the names that look good stall out and hit an air pocket, and then maybe some other name looks good. There's not a lot of sustained trends out there, okay? Just kind of running through the things that I look at. Again, XLP still looks good. I'd love to see this thing sort of sell off here going forward a little bit. But, right now defensive stocks are still in favor. And, I just keep watching. It's obvious. I'm not saying I'm breaking any ground here. But KRE, the regional banks, I mean, I'm sorry, but every day it's going down. Now, you can look at this like, hey, geez, the fact that even the small caps and mid caps aren't really giving up the ghost here, despite basically a rolling regional bank crisis. You could look at that as a small positive, but you'd still like to see this thing at least find support, and of course to see the market react to that. So, it's just one of these things where you have seen it intraday, where the market's looking pretty good, a stock looks pretty good, and then the regional banks start to sell off 1 or 2%, and the market kind of gets corralled a little bit. So, we'll see how it is. It's definitely just something I'm watching. Now, that said, this week, I would just say this is not decisive, but we are starting to see a little bit, like this is the ARK fund. It did pop a little bit. We've seen the XBI. This is biotechs have sort of, rounded up to it. Not that they can't pull back, but kind of trying to round out this big basing pattern. And then even like this is the IBD Mutual Fund Index. Again, it's not, going up or whatever, but, a few good days, you're not that far from looking at this like some big bottoming area. You know what I'm saying? This is tracks a bunch of growth-oriented mutual funds. So, we'll see how it goes. It's just, like I said, we're still kind of stuck in the middle here. When things change, I'm on it every day, but we're still just seeing broad market weak, narrow market, selling on strength, but a lot of setups and things like that. Now, into individual stocks, okay? We're starting to see some of these things. I mentioned this. This is Uber, which, hits its 200-day line up before earnings, gaps on earnings, runs the next day as well. And then, don't get me wrong, it probably, could easily pull back. But it's not setting the world on fire here. But that's sort of, more than just 1 or 2 days up and then the sellers hit it. That kind of was intriguing. And then you had SHAK, which I mentioned, I think, last week. Big move on earnings, whatever this was, last Thursday or Friday, I think it was. And then a big move again the next day. And then even, not a huge move, but up a couple of points after that. So, kind of some follow on. And of course, this comes after. I mean, this was a beautiful, kind of a tight structure in here. The fundamentals are okay. But either way, that sort of action, I haven't seen a lot of that. Shopify, which admittedly, I'm not a big fan of the old leaders and, big picture. I don't know. I'd rather be elsewhere in general. Big picture, it probably could come back some. But either way, what I'm saying, it's a big liquid name that gapped on earnings. And then again, the day after, it didn't just go up a point or two, but went up a few percent. Again, on the third day. I'm not trying to make too much out of this, but this is the first time I've seen this in a while. This is Builder, which is a supply company. It's one of the bigger, I forget, drywall. I forget the exact fundamental story, but a huge player in residential construction and other stuff. Gaps on earnings, opens at $100, and here we are at 117 about a week later. So I'm starting to see these sort of gap and go situations, which obviously is a good thing. It's not widespread. Obviously, there's some damage there. I'm also seeing some, I call it shake and snap, but basically shakeouts on news, earnings, below obvious support, looks terrible. And then within maybe a week, maybe two, but usually like within a week, right back. So here's Duolingo, DUOL. I think I even mentioned this last week, like maybe it snaps back. And it's almost easier to see on the weekly chart. You can kind of see it had this beautiful breakout run. We talked about it. And then boom, big shakeout on volume. But then this week, it's right back on, I call that over the top volume, which just means it's even more volume than the sell-off coming back here. And you can see it here too with the, the earnings day was even bigger than the big sell day. Now, who knows? Maybe this thing just starts doing one of these things. But to this point, that's kind of an interesting shake and snap. And if it can kind of hold in here, which it is so far, kind of interesting. Maybe today, First Solar. Now, First Solar, really broke its intermediate term trend. On earnings, gap down, was down a few days in a row, announced some sort of acquisition today in Europe. I don't know all the details yet, but boom, now it's coming right back. I'm not saying to go out, you go immediately buy these things, but to me, that's kind of an interesting sign that they want to hit it. The shorts got eager, maybe some traders, sold some stuff on some rumors, but then they couldn't hold it down. They kind of were just there briefly, and then some institutional money came back into it. And pushed it higher. You might see it with ACLS. This is ACLS Technologies. Again, I think I mentioned this last week. Really was pretty resilient most of last year. Was the first chip stock to break out. This is more chip equipment. And, stalled out here and then looked done for. But again, it found actually volume support last week. Excuse me. And here it is testing sort of the 50-day line. So again, I'm not saying it's, here it is. It's off to the races. but you're kind of getting this like they want to hit it, but then it immediately snaps back. And it snapped back on no new. It got hit on earnings, but has snapped back since. And then I don't know. There's a couple others like Palo Alto Networks. Again, but just kind of 200. This wasn't a huge decline, but just kind of a breakdown, but then immediately right back. Starting to see that stuff. This is sort of a maybe. This is actually not Duolingo. This is Double Verify DV, a little thinner name, but again, kind of had set up this base and then broke the week ahead of earnings on some short report, I think, and now back. We'll see how volume shapes up. We'll see where the stock closes on the week. But I'm just seeing more of this sort of action, which is interesting when it is kind of a narrow market. And, selling on strength is still, there's most things are running into brick walls like you see here. It gets up towards its high and then tightens up and stuff, but just can't get over that. And then, eventually it hits an air pocket. But these air pockets have recently been a little bit briefer. So let's see if that leads to anything. Okay, so those are all some names that I am watching. Some are on my watch list. And, like with a Duolingo, which I do like, again, I mean, the market doesn't care what I want, but, it's hard to enter a stock that's been moving, 10 points a day sort of thing. But if it can kind of settle down in here, even if it comes up here and settles down, maybe you have some sort of entry point. In terms of just some other names I do like, Inspire, I've mentioned this before. What's interesting, this is the sleep apnea one. What's different this time so far, this was earnings last week, so nice. Again, this is another name that, dipped ahead of earnings. I wouldn't call that the biggest shakeout of all time, but, had a pullback and then kind of right back. The other thing here is this blue line is relative to the S&P 500, the RP line, RS line, whatever you want to call it. It's hit a new all-time high. It never did that. You can see when it tried to break out here in February, that did not confirm, which isn't always a big thing. A lot of times it confirms, a week or two later. But the fact that this is confirming here, I just noted that it is kind of a character change, especially just going, but you can see like the RP line even from the beginning of the bear market or more recently. So that's just something I've noticed. ARGX, this is a $20 billion market cap stock, not a huge mover, $400 stock. But you can just kind of see it's had this big sort of base, and then it's kind of had this base on a base, which is pretty nice and tight in here. I mean, 15%, I'll tell you right now, the last few months has been 18%, which is pretty reasonable. And it's kind of just marching up here. You'd love to see it kind of chill. But anyway, it's right up near resistance. It's just a name I'm keeping a distant eye on. Insulet, the insulin guys. So this is Insulet. Again, so it kind of hits, not to get too in the weeds, but it hits a new high on earnings. Quickly is sold into, but it's still just in this uber tight phase right here. And it just kind of keeps creeping higher. Okay, you can see on the weekly chart, gets hit during the bear market, nice comeback. And I remember talking about it right here. Wow, look at this comeback. And since then, it's just kind of basically gone straight sideways. And just look at how tight it's been here the last couple of months here. Dexcom, there's some M&A rumors here. But again, you kind of have this, decline during the bear market, the initial rally for a few months. And now it's set up this, 5-month structure or whatever, and very, very tight in here, DXCM, and good earnings estimates too. It kind of, it's really kind of new product announcement and all this stuff that's coming out. So let's just see what this sort of thing can do. A couple other names, Freshpet. This is, again, not to keep playing on the same theme. This one had a nice, huge decline, nice rally, and then this kind of nice bottoming action. And then it gets wild. It reverses on earnings. They try to hit it, but then it kind of comes right back, and now it's sort of settling down. I don't know what's going on, but I do know if you just kind of take out the noise and look at the weekly chart, nice and tight in here. A little bit of wobble here, but didn't do anything wrong. Let's see. And the growth, the numbers were good for earnings and stuff like that. Let's see if it can kind of resume its uptrend. And then just two more. So Lululemon, I've mentioned before. The big thing here, chart-wise, was this was the biggest weekly volume, I think, since 2019, I want to say. So that's kind of a clue. And then just like kind of marching higher here, very tight and controlled. There is some old overhead, so selling on strength. Again, it kind of gets up near this high. It's an obvious level for it to pull back, but it wouldn't surprise me if this thing pulls back, calmly on light volume, maybe provides an entry point. And then last but not least, again, it's Las Vegas Sands. Now, I will say before I mention that, Wynn reported earnings, not quite as strong. You can see a little bit of selling here. So, you'd always like to see sort of the industry as a whole do well, not just like one name. But we'll see. It's not like Wynn is, terrible. I mean, it's still in an overall uptrend. And Las Vegas Sands looks better and has sort of pulled back in here toward obvious support. I'm not saying it's gonna hold support per se, but so far, if you're looking to buy dips, this is the type of action you're looking for, whether it's in this stock or something else, where you get a couple week pullback towards support. It's got the numbers. It had some prior buying. It's got the story and all that sort of thing. So we'll see what happens with it. But so far, so good. So back to the market, nothing really new from a top-down perspective. Like I said, big cap, strong, broad market, weak or sluggish, however you want to put it. But I do see, it's not hard to fill up my watch list. Let's put it that way. Now, again, some of these watch list names do hit air pockets, but now we're starting to see some of these air pockets be bought. Okay, so it's a process, not an event. We'll see how it goes. I'm holding a lot of cash, so that tells you, actions speak louder than words. But I really am spending a lot more time on research here, especially after earnings season, just making sure it's there, because if we do come in one day, and like I said, whether it's an obvious thing like the debt ceiling deal or, the Fed giving a speech and saying, we like the path of inflation or something like that, whether it's something obvious or whether it's just kind of a step-by-step thing where, some of these indexes start to kite higher, the broad markets find support, banks find support. I do think you could have some of these names run. But for now, I still think caution's, the best thing of the day. So, okay, that's all the time I have for today. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.